way about it.
Let me get in Lakshmi Iyer as well. Latha is, of course, with us as well. She's CEO, Investment and Strategy at Kotak Alternate Asset Managers. Lakshmi, thanks very much for joining us. This, as Latha said, this was completely unexpected OMO sales. What's the bond market reading of it? Obviously, yields have jumped quite substantially. I think those gains from the India government bond inclusion is all gone. I think we are basically back at those levels once again. You think these levels will stay? And secondly, if you have an eye on stock markets also, should stock markets react in any way, especially banks and financials? Go on.
Yes, Prashant, couple of things on to your first point. Obviously, there has been a knee-jerk reaction, no doubt, and it's very rightly so, given that you already have a second-half borrowing program, as Latha rightly alluded to, and plus you have an additional impending OMO. You do not know the details, by the way, because there is no calendar and there is no announcement of the date. Obviously, some sets of markets do believe, and that's reflected in the yields, that it will play some crowding out effect in terms of incremental net demand. And that's where we are seeing things right now. So 711 to 735, we've already seen a massive bump up. I think now the yields will have to consolidate, probably come down 5-10 basis points, go up. That's how it's going to be. And from an, if you try to tie this into the larger markets, from an equity market standpoint, till the time the bond yields or the sovereign bond yields stabilize, it's very difficult to see the corporate bond yields come down. And that clearly means that, the cost of borrowings are going to remain at elevated levels. And one will have to take that into consideration when you are deploying money into the equity markets as well. I don't think markets have still fathomed that. So I think there needs to be some bit of caution even on the equity markets.
Okay, I haven't seen it in the NBFC stocks at least.
Lakshmi, just very quickly, follow up. Same question that we were asking Latha. Why do you think they're doing it? Why an OMO? When anyway system-wide liquidity is a little tight, right?
So, they have not mentioned that they are going to do it here and now. Intent seems to be clearly there. Also, we are going to see, starting because of the inclusion, we are going to see some flows coming into the country. So I think it's going to be a combination of either or. And also, if you listen to the governor, he clearly said that it is going to be depending on evolving situation. As of now, as is where it stands now, is there a case to do an OMO immediately in the next few days? Intuitively, no. So I think that is something which markets will have to take a breather. And given that, U.S. yields relentlessly were rising and our bond yields were, kind of absolutely Teflon coated, I think that also some bit of give back is happening, despite the fact that U.S. yields have come down by about 15 basis points from the peak.
That's the point, Lakshmi. Do you think now, if there is this huge amount of global funds who are going to buy our bonds willy-nilly, you are going to be scrutinized more, right? Interest rate differentials, fiscal policy, monetary policy, intent towards inflation. You just have to wear your credibility on your sleeve. Would that be one reason?
I don't deny that. If you ask me today for a foreign asset allocator, and I've just come back from my global roadshows, if you look at a global asset allocator who is, say, not a benchmark hugger, for example, the US yields are looking very, very lucrative. And there is honestly no great incentive to immediately deploy money, at least into Indian bonds. So that definitely will be one of the criteria which will define the shape of the yield going forward.
Just one quick question, Lakshmi. Again, I'm kind of tying it back to stocks. If the aim is to take excess liquidity out of the system, encourage banks to lend more freely, if they're able to achieve that aim, is it negative? Because that would mean higher yields for lenders and lower cost for depositors. Freer credit for depositors.
No, they do not want liquidity to be in the surplus zone. It is okay to be adequate. It need not be deficit. It need not be higher. As we speak right now, the banking system liquidity is in the negative zone. It may get into positive because of spending, etc. But I think that is when you will see. And plus, we need to keep in mind that we have festivities ahead. So currency circulation is going to go up towards the end of the month. So I think it's going to be a very, very, multiple ball juggling act. It's not going to be a quick fix solution either which ways.
Okay, all right. We'll leave it there, Lakshmi. Thank you very much for joining us. Good sort of conversation. And we'll keep coming back to you for more perspective as this story develops.
As Reema said, at the moment.